So hi traders. So today I'm going to talk to you about some common mistakes that you might make as you're interacting with ZD Trader. So when people are new into the stock market, they generally tend to fall for some common mistakes, or rather these are things that people who've come before you have done them, and if you're wise, you should be able to learn from them. And most of these mistakes are actually behavioral, in that how you behave in the market or how you make your decisions will generally affect whether you will make money or you will lose money in the market. So common mistake number one that I'll go through is FOMO buying. So FOMO stands for fear of missing out. So for example, recently we had the KPC IPO, which took place, I think in February. That's when the KPC IPO was officially in the market. So if you are trading and you didn't get a chance to buy the stock before the IPO, you might be tempted to rush and buy it just because you missed out on buying. Or for example, let's say a company announces that they are going to do better than expected earnings. Let's say like Equity recently had record profits, which everyone saw. And so there was the propensity of people trying to own that stock, regardless of what price or what value it's trading at. And so you rush to buy just because other people are buying. So that's FOMO buying. And by the end of the day, if you keep making your decisions that way, you'll find that you don't make money. Now, the opposite of FOMO buying, which is basically fear of missing out, is panic selling. So let's say you've bought a stock like Total, or you've bought a stock like, let's say ABSA or Copbank. And ABSA comes out with, let's say, news that is likely to affect the price of the stock. Or ABSA has a sudden drop, let's say from 29 shillings a share, it drops to 25 or 24 shillings a share. And then you panic and you rush to sell the stock rather than even trying to understand why the stock is going down, how far it will go down, and where it's rational for you to execute or liquidate the particular position that you're holding. So that's panic selling, which is very, very common in the market. For example, if you look at historically periods where we've seen panic in the markets, you can look at periods like, let's say, when COVID hit, stock prices in most places in the world actually went down significantly. And it was as a function of panicking about the effects of the virus and how it would affect the general economy and the general companies that are doing business in the different economies. So that's panic selling, which is also a mistake that most traders definitely fall for. So we've gone through FOMO buying, which is basically fear of missing out. We've looked at panic selling. The third one, which is very, very common, and that's where most people actually fall, is buying companies or investing without doing any due diligence or any research or having a decision-making framework. So when you're making any decision on which companies to buy or which shares to buy, you should at least do some basic research. For example, do you understand what is the core business of the company that you're buying? Do you understand what is the core revenue? That is, where do they get their money or where do they get their earnings? Because as you're buying shares, you're not only speculating on the prices going either up or down, but you're essentially owning a piece of a company, and you should really understand what the company is doing. So what is their due diligence? What makes them competitive in the market, or what makes them unique? Why you think it's likely to keep on growing, and at what stage of growth the company is, how uniquely positioned is the company. So just do some basic research. And in my advice, I would also tell you that as you make each investment decision, as you buy or sell, make sure you have the reasons behind your buying and selling decisions, so that over time, as you accumulate more time in the market, you're able to realize your decisions that are working and the decisions that are not working, and why some are working and why others are not working. And through that, you can be able to come up with a repeatable model or a repeatable process that you can use when buying and selling shares in the stock market. So I've gone through panic selling, I've gone through FOMO buying, and I've gone through the last one, which is investing without basic due diligence. If you can just cover yourself from making those three mistakes, you're likely to do better than someone who's repeating those mistakes. So those are a few mistakes that people normally make when they join in the markets. And for you, as you're using the ZD app to trade and to make decisions in the market, I would tell you to avoid those three things, and specifically the last one. Try as much as possible not to invest based on hype. Don't invest based on what a certain politician is saying or a certain person is saying. Instead, do some basic due diligence. Understand the fundamentals of the company, why it's likely to do well, why it's likely to do poorly, and then make the decision on what to buy and what to sell.